Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about GVK Power. Will it ever recover from 3 or 4 rupees, or should we completely avoid? So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research. And I'm not in favor or against any company that I talk about. Before I talk about GVK Power, a small request that kindly support me on Patreon, and once you do that, it will help me grow the channel, help you also ask me questions on a daily basis. Once you get the $10 membership, you'll have access to my portfolio, my watch list, and a number of podcasts that I put up from now and then. For detailed market or company talk or number of stocks you're holding, you can directly email me and we can have a one-on-one discussion. Now about the company. Established in 1992, GVK Power provide major infrastructure and power solutions, constructed major Indian airports, and also prevalent in transportation, energy, and hospitality. Completed projects of around 20,000 crores so far in India, and this is marred by the infrastructure downturn. And what has happened, because the company was under a lot of stress of debt, and with the infrastructure downturn that has taken place over the last decade, the company has completely gone under. If you look at the numbers, and these are Q3 numbers, these are FY21 versus FY20 numbers, and you look at that, the sales has gone down by around, so sales were around 37% lower. There's a loss that has come up compared to the loss last year. There's very high interest cost, and that is the reason why the company is doing very badly, and they have shelved off a lot of their you can say products, shelved off a lot of their projects, and sold off a lot of their capital in order to, or you can say whatever they had, many of their real estate, you can assets, many assets they have sold off, and they are left with very less assets, yet the company is under a lot of stress of debt. If you look at the performance of the stock has underperformed over the last 5 6 years. Numbers have improved over time, but is not looking that great. Debt has ruined the company. So what has happened is, last 1 year numbers kept on becoming better, and we have seen even marquee, you can say large investors getting into the stock in hope of making 3 4x 5x return, getting into the stock at 4 5 rupees, and eventually even exiting around 17 18 rupees. The stock reversed and went back to something like 4 5 rupees again, and that has been the pattern over the last 6 7 years. So since 2008, the company has faced a lot of trouble with respect to execution of projects, with respect to performance on the ground, with respect to high debt burden that kept on increasing, and that completely ruined the company and ruined the money of the investors, those that have put faith into the stock. Airport infrastructure, yes, it is picking up, and there is a chance that they will get better projects going forward, but the company is in mega losses. And you need to understand that even if they get the project, whether they have the machinery, manpower, etc., and the money to execute the project or not, we don't know at the moment. So what has went wrong in the company? They took major debts during the 2007 peak. That was the first reason. And so from 2003 to 7, they did extremely well, as was the case with many real estate companies. And the company went on producing very good numbers. They were having a lot of assets, lot of projects in hand. But then one needs to understand that at that point of time, companies were being projected on the basis of the number of assets they were having, the number of projects they were having, rather than on the execution rate, rather than what sort of cash flows that they are generating. And that's why companies like Suzlon and DLF, etc., with very high debt, still went on to be 100 beggars. So from Suzlon went from 3 rupees to 340 rupees, something like that, in 3 4 years. So one has to be careful investing in such companies, and that's why I'm making the video. The writing is on the wall for the company and we all know about it, but the reason or the main crux of making the video is that getting into companies which are single digit, which are you can say penny stocks. Why they are penny stocks? What are the reasons? Majorly, debt is the major reason why companies become from a three-digit stock to a single-digit stock, or a four-digit stock becomes single-digit stock. Debt, and you can say fraud with respect to companies or management coming up with very different numbers to what exactly the numbers are. So that's why we need to stay away from such companies. So took major debts during the 2007-8 peak and could not repay loans post the 2009 crisis. So we had the housing crisis, we had the global financial crisis, and in that meltdown a lot of companies went under. GVK was one of them. They had to eventually sell major assets, and we have come to know that they started selling major assets post 2015-16, not during that time, because at that point of time they were still very resilient, and the management was very gung-ho that they will recover once once all these things recover. 2010 we saw the markets go up again on the back of higher oil prices. ONGC etc went up and we saw 6200 on the market, but companies like GVK did not recover that much. But 11-12 onwards the management was positive that they will do better, and things will again come back to you can say line etc. But we saw what happened. So basically they could not, and the numbers kept on becoming worse. But from 2015-16 onwards they started selling their assets, and what that has meant is that their debt burden has reduced, although it is a ballooning debt, but that burden has reduced. So there is a glimmer of hope that the company would come out with better numbers. But we as investors should not be fooled by all this, and believe that okay, let's invest and this could turn around. Let things turn around. Even if a 6 7 8 rupees stock becomes 30 rupees, that's okay. We buy when it is 4 5x rather, and sure about the company doing well, rather than buying the stock at a very low level, and hoping that a recovery will happen, that a turnaround will happen. That is more detrimental. So that's another you can say lesson that you need to learn, that we as an investor need to learn, that we need to see semblance of recovery in the numbers. Even if that means that the stock price zooms, that's okay, but the recovery should be in the numbers. So it has reduced enormous burden of debt by 2018, yet the numbers are not quite up there that could be considered. So it may take a while before the recovery takes place. So what needs to be done? Avoid for the time being, as major assets are sold off. Then you need to understand what sort of a business is left. How are they going to generate cash flows? How are the you can say numbers going to get better, or revenues and profits are going to come in? Because if they sell all the assets, then how is the business is going to be run? So look for low debt infra firms, or at best is just avoid the infrastructure real estate space. Even if that does well, you get into pure cash, quite cash rich businesses which deal in cash etc. You have IT, you have pharma, you have some chemicals that could do well going forward, and you have consumption. So survivors will be leaders of the future. Find out survivors which are debt free, pledge free, and high promoter stake etc. And just completely avoid the sector as a whole. So this was a video on GVK Power. Please like and subscribe my channel and hit the bell icon so that you can get my videos straight away when I post it. Thanks a lot for watching.